we've been speaking about the tail end of last year and this year, what's considered positive data and how you interpret it based on the current macroeconomic conditions.
Seems like everything's positive data with the market going the way it
depends on which way you want to look at it, right? So GDP for the US in their last quarter rose at an annual rate of 2.9%. Now, that's quite positive because the expectation was 2.4%. But as we know, with the Fed increasing rates at the moment, you don't really want to see the economy expanding as quickly. There should be contracting slightly to really have the economy fall back into that equilibrium area. So it did rise about 0.5% more than expected for the December quarter over in the US, which, as you said, you can flip a coin and you can say it's positive or negative. Depends on which way you want to look at it. But with regards to the inflation fight, not overly positive, but for the broader economy in the US, very, very positive.
So you're thinking optimistic here? You think we're going to do well this year? I know, what did I see? A quote, they reckon about 12% upside for the S&P.
Fundstrat came out with their forecast overnight, which is a big fund over in the US, and their forecast for points on the S&P 500 at the end of this year is 4,500, which is about 12% higher than where we are now and would leave us approximately 20% higher for the year. So they're very optimistic for this year, and they think it'll almost be a pretty traditional upward trend formed throughout the year based on the way they think it will technically see. They said the March quarter should be quite positive, and then they think it'll be a pretty traditional upward trending year.
So let's take it all the way back to stock picking. Now, in my relatively obtuse mind, I sit there and I think, right, Australian market's very nearly on an all-time high. Is it time to cycle into businesses that haven't seen the rally yet? Is it time to get into those things that have quite badly beaten down? And by then I'm talking about things like your Adelaide Brightons, your Lendleases, these ones that have just been hammered and hammered and hammered, even your CCPs, even, dare I say it, something in the tech space like app and technology. These things that are just very badly beaten down because logically they normally are outperforming the market on the way up.
Correct.
And would it say, is there going to be growth there? Because you'd be pretty optimistic to jump into the market on that quadruple top that it's hit. So is it now time to, but that doesn't mean you're not going to make money as a stock picker. So is it time to cycle into those businesses that are a bit lower down?
Yeah, I think there is a lot of potential for those businesses here. I think a key one that we haven't really touched on, it's sort of swept under the radar on the ASX 300 for the last year or so, is ASM. I think ASM is something that's sitting very, very low at the moment, and it looks like, I think the material space has quite an optimistic outlook for the year, the industrial space. Fundstrat actually came out and said that they believe energy and materials are going to outperform again this year. So it sort of depends. I think you're right. It's definitely going to be stock picking, and I think sometimes, especially after a year like we had last year where some businesses were down 85, 90, I think the worst performer was CCX and it was down like 92 or 93% for the year.